Guys will be starting the session in next 1 minute. So good morning, everyone. Welcome to today's show of Pre-Bell with William O'Neill India. In today's show, we'll take you through Nifty 50 chart placement along with its probable opening, some key global news and events, how US markets fared through the night, how Asian markets are trading at the moment, and at the end, chart of the day for you. Without much ado, let's start with Nifty 50 chart analysis. So on Monday, as you all know, we got a follow through day when Nifty advanced by nearly 1.5% on volumes higher than the previous day. But as Nifty was staging a positive setup, as Nifty is trading above its 50 DMA and majors, your broader market indices such as your uh, um, Nifty mid cap and small cap are also trading above the 50 DMA and have staged their follow through day. And major sectoral indices are also trading above their 50 DMA and have staged a follow through day, which tends to be a positive setup for the overall market. Hence, we shifted the market to confirmed uptrend on Monday. Talking about yesterday's move, Nifty had a gap down opening of 70 to 80 points. But the good point was that the low and the opening for yesterday's trade was same, and Nifty managed to close in nearly the top quartile of the day's range, which was a really positive move. Nifty continues to stay above the FTD is low and also above the 50 DMA, which is a really positive sign. The next the next logical resistance for Nifty can come near the 200 DMA, which is still around more than 17,000 levels. So talking about the key news for yesterday, as the result season is in motion, Ambuja Cements reported its Q2 CY22 results, which had a good beat on the estimates. Revenue increased by 18.5% YOY to 3,993 crores. EBITDA increased by 28.7%. However, as we all know, the incremental amount of your margin, your raw material cost have a good margin pressures on the company. So EBITDA margins contracted by 1,135 BPS to 17.4%. YOY last quarter's margin was nearly 28.2%. But if you look at compare it from the consensus estimates, the consensus estimates margin was around 17.3%. So the miss on the estimate front is not that much. PAT increased by 44.9% YOY to 1,447.9 crores. Even HUL reported its Q1 FY23 results, which was again a beat on the estimates. Revenue increased by 19.8% YOY to 14,272 crores. EBITDA increased by 14% YOY, and EBITDA margins contracted by 115 BPS YOY to 22.75%. PAT increased by 11.1% YOY. Grasim to invest 2,000 crores over 5 years on B2B e-commerce platform for building materials. Talking about how market movement activity for yesterday. FI bought nearly 976 crores of equities yesterday, and DIIs sold around 101 crores. Even ICICI Lombard reported its Q1 FY23 results. So gross premiums for the insurance company increased by 30% YOY to 5,530 crores. Combined ratio at 104.1% versus 123.5%. Underwriting loss at 193 crore versus loss of 62.5 crore. PAT up 80% YOY. If we talk about the major companies that will be reporting the results today are Wipro, IndusInd Bank, Havells India, CEAT, Century Plyboards, Gland Pharma, and others. Talking about the global market, US markets were in a super rally mode yesterday when all the three indices had a gap up opening. And post the gap up opening, they closed nearly 2.4%, 2.8%, and 3.1% higher for Dow Jones, S&P 500, and Nasdaq. Talking about the Asian markets also took cues from the US markets as they are trading in a positive range. The lowest being the Shanghai Composite, which is just 0.7% higher, Kospi by 0.9% higher, while Hang Seng and Nikkei are trading in a high positive range of 1.9% and 2.4%. Talking about USD INR, yesterday USD INR had touched an all-time low of 80 and was currently trading around 79.88. Crude oil after last week, after making a lows of nearly Brent crude oil around 95, 95.5 levels, have again reached 107.34 levels. US 2-year, 10-year, or the 10-year, 2-year treasury yield continues to be inverted by yesterday. A 10-year yield is around 3.026 and the 2-year yield is around 3.23. Talking about the SGX Nifty, SGX Nifty is indicating a positive gap up opening of around 200 points. Yesterday's close was around 16,300 or 16,320 to be exact, and around 10 minutes back, the SGX Nifty was trading at around 16,546, which is a huge gap up opening of more than 200 points. Talking about the sector view, as I was explaining during the analysis of Nifty, major market indices even the sectoral indices are in the rally mode now. The only indices that are not in rally are BSE Sensex, which is yet to stage rally attempt, and pharma, which is in rally attempt, and IT and energy, which continues to be under pressure. If we talk about the D-Day count as well, apart from IT, the D-Day count continues to remain subdued, which is a really good sign. Talking about how they fare from the 50 DMA and the 200 DMA, just the IT and the metal indices are below the 50 DMA. Otherwise, all the indices are trading above the 50 DMA. And major market indices such as your Nifty 50, your mid cap 100, small cap 100, and even certain sectors have taken out their 50 DMA on higher volumes, which is a really good sign. And the two sectoral indices which are in key uptrend which are rallying the most are FMCG and auto, which are even taken out their 200 DMA and are trading nearly 10 to 12.6% above their 200 DMA, which is a really good sign. So talking about the chart of the day, start of the day for today is Maruti Suzuki. So before we go any further about discussing this stock, so it's not a buy or sell recommendation, and we'll be discussing it just for education purpose. As we all know, Maruti Suzuki is the largest PV maker or PV car maker in India, with an overall domestic market share of nearly 45%, and ex-SUV, the market share is nearly 65%. So a couple of quarters, a few quarters back, the market share was around 50%, more than 50% for the company, and the last few quarters have been sluggish, mainly on account of the other players capturing market share from Maruti Suzuki. But if you look at the future plans from the company, the management is positive of capturing market share greater than 50% going forward. And they plan to do this by new innovative launches in your utility UV segment or the SUV segment, such as Maruti Suzuki Vitara as well. And talking about cleaner vehicles, so CNG compromises a good 15% to the top line, and the company wants to increase the contribution of CNG vehicles going forward, as the Indian government thrust uh, on your non-fossil fuel vehicles, uh, or your non-fossil fuel, non-conventional vehicles such as your petrol and diesel. Even the company has a long-term vision for the EV vehicles, and will be launching a complete EV vehicle in 2025 going forward. The company expects to revert back to around 9.5 margins in FY24, and with your high steel cost, which is 50% of the raw material cost, the company expects the Q1 FY23 margins to remain subdued, but the margins are expected to revert back as the year progresses, maybe in Q2 FY23 or Q3 FY23 going forward. So as we were discussing about, the earlier fundamental aspects, because of that, the EPS strength remains poor, but as the chip shortages and your commodity cost inflation starts is getting eased off, and there is a huge pent-up demand still there for the industry to capture it. The market leader, your Maruti, has a huge can have a huge run up going forward. So talking about the group rank remains really strong at 23, because the autos as a pack and PV maker is as a pack is really moving forward, and even the buyer demand remains great at A. Price strength is fair at 73, but if you look at the RS line, the RS line has been trending higher in the last 1 to 2 months, which is a really good sign. So talking about uh, the chart formation, the stock is forming a stage one cup base, and the stock is just 3.77% of its highs and nearly 4% from the pivot, which is a really good sign. So the markets have finally come to confirm the uptrend, and let's see how the stocks behaves around its pivot, and whether it's able to give a clean breakout or not. The stock continues to remain in our buy watch list, and even people can have a good look at the stock, and if the stock breaks out, can think about adding the same. Thank you, and stay tuned to the space of Prevail with William O'Neill India, and as well connect with us for our after hours show, which is at 4:30 p.m. every day. Thank you.